Drawdown doesn't damage your trading psychology by itself. It damages it when you don't know how to mentally operate inside it. The moment you understand what drawdown is actually doing to your mind, you've stopped spiraling, stopped reacting, and stopped destroying your own edge. Most traders think drawdown is just a number, a percentage, a temporary dip in equity. But the real damage of drawdown doesn't show up on your account balance. It shows up in your behavior. That's why two traders can experience the same drawdown and end up in completely different places. One survives and stabilizes, the other self-destructs. At the beginning of a drawdown, everything still feels normal. You tell yourself losses are part of trading. You stick to your rules. You stay calm. But slowly, something shifts. You start checking your account more often. You replay trades in your head. You feel a quiet pressure building, even if you don't admit it yet. That pressure is the start of psychological erosion. Drawdown changes your focus. Instead of being focused on execution, structure, and confirmation, your attention moves to recovery. You start thinking about how long it will take to get back, how many trades you need, how much you're down. And once your focus moves to recovery, your psychology is no longer neutral. This is where drawdown begins to destroy clarity. The market hasn't changed, your strategy hasn't changed, but your perception has. Every setup now carries emotional weight. Every loss feels heavier. Every missed trade feels like lost opportunity. You're no longer reading price, you're reacting to your equity curve. This is where discipline starts to crack. At first, the cracks are small. You enter slightly earlier than usual. You tell yourself you're being proactive. You take a setup that's close enough, even though you know it's not clean. You increase size just a little because you want to recover faster. None of these actions feel reckless in the moment. They feel justified. That's what makes drawdown dangerous. It doesn't make you emotional in obvious ways. It makes you rationalize emotional decisions. Drawdown also attacks your confidence in a very specific way. Not all confidence, selective confidence. You start doubting your edge while simultaneously trusting your impulses more. You think the strategy might be broken, but your gut feels sharp. That contradiction leads you to override rules while questioning the system that created those rules. This is how psychology gets inverted. You stop trusting process and start trusting feelings. And feelings under drawdown are not objective. They're defensive. They want relief. They want certainty. They want the discomfort to stop. That's when revenge trading enters, even if you don't call it that. You take a loss and feel the urge to act immediately. Sitting with the loss feels unbearable. You want to do something. You want control back. Action feels like control, even when it's destructive. So you jump into another trade, not because the market presented a clear opportunity, but because you can't tolerate inactivity. If this is sounding familiar, pause for a moment, like the video, subscribe to the channel. Share this with someone who keeps trading immediately after losses. This awareness alone can save an account. Drawdown also distorts time perception. Everything feels urgent. Waiting feels dangerous. You feel like if you don't act now, you'll fall further behind. That sense of urgency compresses decision-making. You analyze less, you click faster, you skip confirmation, you trade lower quality setups. This is not because you forgot your rules. It's because drawdown makes patience feel expensive. Another psychological effect of drawdown is identity threat. If you see yourself as a disciplined trader, a losing streak challenges that identity. You don't just lose money, you lose confidence in who you think you are. To protect that identity, your mind looks for ways to regain control quickly. That's when ego gets involved. You stop accepting randomness, you stop accepting variance, you start fighting the market instead of responding to it. And the market always wins that fight. Sometimes drawdown rewards bad behavior. You force a trade during drawdown and it wins. Relief floods in. You feel validated. That win doesn't heal your psychology, it rewires it. It teaches your brain that emotional urgency can be profitable. The next time drawdown hits, reaction feels even more justified. This is how drawdown destroys trading psychology over time, not through one bad decision, but through a pattern of small compromises that slowly replace discipline with reaction. So, how do you stop this from happening? The first solution is redefining drawdown before it ever occurs. Drawdown is not failure. It is not a sign that you're broken. It is not punishment. It is a statistical phase of any probabilistic system. Every edge has losing streaks. Every professional trader experiences drawdown. When you accept this fully, drawdown loses its emotional charge. You should know your system's expected drawdown range, not roughly, precisely. When you are inside that range, nothing is wrong, and when nothing is wrong, urgency disappears. The second solution is pre-planning your response. You do not decide how to behave during drawdown while you are in it. You decide in advance. For example, after a certain drawdown or number of losses, you reduce position size, pause live trading, or switch to review mode. This removes emotional decision-making at the exact moment emotions are strongest. Professionals do not rely on willpower, they rely on structure. The third solution is separating recovery from speed. Most traders believe recovery must be fast. That belief destroys psychology. Fast recovery demands aggression, which increases emotional exposure and variance. Sustainable recovery comes from consistent execution, not urgency. You do not recover by trading more, you recover by trading better, and sometimes by trading less. Another critical solution is changing your scoreboard during drawdown. When equity is down, focusing on P&L fuels reaction. Instead, you judge success by execution. Did you follow your rules? Did you wait for confirmation? Did you size correctly? If yes, the day was successful, regardless of outcome. This shift protects discipline when profit motivation collapses. A powerful question to ask before every trade during drawdown is this: would I take this trade if I were at equity highs? If the answer is no, you don't take it. That question instantly exposes reaction-based trades. You also need to slow your environment down. Fewer charts, fewer timeframes, fewer trades. Drawdown speeds up your thoughts. A slower environment restores objectivity. Sometimes the most professional move is stepping away temporarily, not quitting emotionally, pausing deliberately. Trading while psychologically compromised only deepens damage. Stepping away protects capital and mental clarity. Over time, something important happens when you apply these solutions. Drawdown stops controlling your emotions. Losses stop triggering urgency. You stop trying to fix things immediately. Discipline becomes resilient instead of fragile. Here is the final truth you need to understand. Drawdown does not destroy trading psychology. Unmanaged reactions do. The market applies pressure and behavior is revealed. When rules remain intact under pressure, consistency survives. When reactions replace rules, psychology collapses. If this video is helping you see drawdown differently, like it, subscribe, and share it. This channel exists to protect traders from psychological mistakes strategies cannot fix. You do not need to eliminate drawdown. You need to eliminate destructive reactions to it. When you do, drawdown becomes temporary, manageable, and expected. If you made it to the end, you are already ahead of most traders because you are willing to confront behavior instead of blaming the market. Like the video, subscribe to the channel, comment what drawdown does to you psychologically, and share this with someone who keeps trading emotionally after losses. Drawdown destroys trading psychology only when reactions replace discipline. The moment you regain control of your response, drawdown loses its power, and your edge survives.